Let's welcome on board Shibani Sircar Kurian as well. She's joining us to talk to us about the fundamentals of the markets. Shibani, hi. Let's begin with PSU banking space itself because that's the most, that seems to be the flavor right now. Which are the names, if any, that you can talk about which look still very good? Will you stick your neck out and talk about only the large cap, PSU banking names, or is it getting a lot more wider?
Hi, good afternoon. While I can't, talk about specific names, but let's discuss the PSU banking pack as a whole. So, if you look at what's been happening, not just today, but over the last year or so for most of the PSU banks, is that there has been, and given that there has been tailwinds in the overall banking sector as well, there has been improvement in terms of profitability as you measure in terms of return on assets for the bank. The second most important factor is that we are now in a scenario where credit costs have been extremely benign. And then, together with the news that has come in today in terms of the bond inclusion, the fact is that overall it does look that from an interest rate perspective and bond yield perspective, there is the much needed downside support that has come through. So, all of these factors are resulting in the re-rating of many of the public sector banks, especially given that they were trading at very, very low valuations in terms of price to book. Now, from here on, the way we are looking at the space is that we need to look at banks where there is still possibility for return ratio improvement and also banks which are able to protect their market share. Now, in the near term, if bond yields remain benign, there will be the element of the trading or the investment gains that come in, which can help in terms of profitability. But from a core profitability perspective, we will clearly focus on banks which are showing ROA improvement going into FY24 and FY25. And that's where you will still see momentum or still see possibility of re-rating in terms of multiples. So here our focus will be towards the slightly larger PSU banks, given their ability to defend market share as well as their ability to raise capital, which will again help in terms of loan growth as well as deposit growth. So that's how we are looking at the entire PSU banking pack.
Take on the PSBs. Let's just see what the entire consumption pack is up to. And, typically you would start off with the auto names. They're sure the ones which are actually holding up quite okay in trade. So be it a Maruti, that's looking strong. You've got an M&M as well, which is seeing a bit of a bounce coming in. And that's pretty much the case across the auto pack. Even a Hero MotoCorp is decent enough, about a 1% uptick or so. Shibani, very soon it'll all be about what the festive season color is like, right? What is your anticipation, especially when it comes to the auto sales and the demand revival there? Because it pretty much, covers across spectrum, everything from rural demand to CVs and even, the urban PVs.
Yeah, so let's look at autos maybe to say three packs, which is the PVs, the CVs, as well as the two-wheeler pack. Now, within the entire space, what we have seen is that the commercial vehicle segment had seen growth pick up, and we expect that overall, as long as economy continues to grow and you see infrastructure activity pick up, the CV segment should remain fairly robust. Within the CV space, of course, there can be different segments which do better than the others, but overall, we expect that the growth on the CV space should remain fairly intact. The second comes the passenger vehicle side. Here again, while growth has picked up, there is dichotomy in terms of the segments which are performing well. Clearly the premium category, the SUV category continues to drive growth, while at the bottom of the pyramid, the lower end segments are lagging behind. And that's where again the element of the bottom of the pyramid demand or rural demand comes through. So going into the festive season, it will be important to watch out for two trends in the passenger vehicle space. One, of course, the sustenance of the demand, especially where premium category is concerned. And do we also now start to see some improvement at the bottom in terms of the rural demand or the bottom of the pyramid demand coming through? So that's the PV segment. On the two-wheeler side, we have started to see initial signs of recovery. But here again, it is the premium two-wheeler segment which has seen improvement because of the recovery and the demand recovery that has come through. And again, here the rural demand coming through will be an important determinant for the overall growth coming back within the two-wheeler segment. Now, the initial signs and the kind of conversations that we are having is that the expectation is the festive season should see some pickup in demand. But of course, we'll wait and watch. For us, we believe that the auto pack is fairly well placed. As we said, there are pockets where growth remains strong. margins improving because of lower commodity costs continues to play out. And therefore, in terms of our portfolio positioning in the auto space as well as the auto ang space, we continue to be overweight.
Okay, so that's the take coming in as far as the automobile industry is concerned. But Nuresh, or rather Shilpa, tell us about Wipro as well. That stock is seeing a bit of a cut today because of the leadership change that has happened, the sudden resignation of Jatin Dalal, the CFO. But would you buy that dip at all?
No, I would like to wait out a bit because Wipro now trading below 420 is a little cautious because you might see a dip towards 408 to 405. So I would buy on declines to 410. That would give me a better risk reward ratio for targets of 445 to 460. Position rate is intact, but on dips buying is much more recommended.
Okay, so that's a take on Wipro, but let's go across to my colleague Anurag to get the latest as to what's happening with respect to surety bonds, because we understand that the finance minister has met the head of insurance companies. What was discussed and what are the key takeaways, Anurag?
So last year's budget, a surety bond was announced by Finance Minister Nirmala Sitharaman, but we have seen that in last 1 year the surety bonds has not picked up, and government want to put a surety bond as an alternative to bank guarantee for infrastructure projects. So recently Finance Minister Nirmala Sitharaman has met insurers to discuss the developing surety bond thing, because government want to push the surety bond, and in that meeting Transport Minister Nitin Gadkari was also present. So government just want that more and more companies to come up with the surety bond product, because in next 5 years we will see around 100 trillion rupees of infrastructure projects will be coming in, and it will require around 90 trillion rupees of bank guarantees. And as of now, there are only 2 insurance companies has developed their surety bond products, and for bank guarantees it's very difficult for infrastructure companies to get the bank guarantees of large size, and NHAI also complained about not getting bank guarantees for their infrastructure projects. So in this regard only, government want to push for surety bond, where insurance company will cover the project if any kind of default or non-completion was happened. And recently IRDA has also curbed the made the norms easy by reducing the solvency for surety bond products. So the purpose of the surety bond is to boost the liquidity for infrastructure and housing projects. So after this recent meeting, IRDA has also come up with a note explaining the importance of surety bond and how insurance sector can collaborate for infrastructure financing. So in coming days, we'll see that the large number of new products will be launched by insurance companies, because government will also want to push the surety bond for infrastructure projects.
Right. Okay, Anurag, we'll leave it at that. Shibani, if I could just get your thoughts on the insurance sector at large, right? Because it hasn't been that much of a hit with at least equity market participants as one would have thought, in terms of how intact or how strong the long-term trajectory for insurance sector in India is, given that, you know, it's at a minuscule and a very nascent penetration stage in the country. But that said, do you think right now is the time to build up a portfolio and get in some insurance stocks in there?
Yeah, absolutely. You're right. When you look at the structural growth opportunity where insurance is concerned, whether it be life insurance, health insurance, or even any of the general insurance categories, given the kind of penetration levels that we have, we do believe that the structural growth story is fairly intact. But remember that the insurance space, especially over the last few years, has gone through significant amount of turmoil. So starting with COVID, which impacted most of the insurance players, then subsequent to that, we've seen a lot of regulatory changes and the tax changes, which have impacted growth in the sector. But I think now that the sector, especially where life insurance goes, having gone through such a lot of turmoil in the last few years, both because of the external COVID situation as well as regulatory changes and tax changes, I think now the sector seems to be settling down. If you look at the monthly data that is coming out, what is clearly evident is that APE growth, especially on the retail side, is starting to inch back. And therefore, there are signs of growth coming back. Our belief is that one, the market share shifts towards the larger life insurance players will continue. Secondly, from a protection perspective, again, a segment which got impacted. Protection growth seems to be coming back, and pricing has now more or less settled, and that is also aiding growth coming back. And this year, if you look at what happened all of last year, a lot of the VNB growth that insurance companies reported was on the back of margin improvement. However, this year, APE growth is going to be the key driver, and therefore, if growth does come back over the next few months and we start seeing signs of that, the valuation, especially where life insurance is concerned, appears to be fairly attractive. So therefore, this is a sector that we would incrementally start evaluating given the growth valuation dynamics.
Hold that thought. Let me also flag out some of the stocks which are, buzzing around on high price volume action. Berger Paints, of course, has been advancing for fourth consecutive session, has hit a record high today, and the volumes are 5x the 20-day average as we have seen recently. And as we pointed out, there was a split also that happened today, so there's a bit of impact there. Canara Bank has hit a 5-year high on an intraday basis. It's forming a bullish belt hold candlestick pattern and has been advancing for fourth consecutive week. And then, of course, you have Indus Towers, which is seeing quite a bit of positive, build up as well. It's up around 3%. In fact, talking about Indus Towers, let's go across to my colleague Sharad, because he's been working his phones and getting the sense from the dealing rooms as to why there's a lot of interest in Indus Tower today. Sharad?
Well, yes, in focus, we're having Indus Towers, and the stock has snapped its 3-day losing streak, and the stock is up more than 3%. And now what we are hearing from the dealers is that marquee HNI investors have been buying stake in the company. Now, apart from this, also the volumes, if you look at it, that's coming at almost 2 times its 30-day average. And one of the major triggers for the stock is the debt receivables coming from Vodafone Idea. Also important trigger is that companies exploring other new geographies, especially in the 5G and the fiber space as well. And also the company will be meeting HNI investors in the JP Morgan Investment Summit, which is scheduled to happen on September 25. Now, the brokerages have stated that the company itself is a good play on the dividend front, as well as the valuations are attractive. Recently, Citi also came out with this report giving a buy rating and a target price of 230 rupees per share.
Point taken, Sharad. Kunal, your take as far as Indus Towers and Vodafone Idea is concerned on the chart patterns?
So Idea I'll not look to trade or recommend, because I think it's a bit of a volatile kind of a stock. I think Indus Tower is something interesting. The stock has given twice breakout above its 200-day moving average, and I think that was close to 167, 168 for Indus Tower. The stock moved up towards 187, 188 mark, I think a couple of weeks back, and then mild correction came back towards 175, and this is the second attempt towards this 187 mark. Now, in the second attempt also, the stock has been holding on above its 200-day moving average. So I think that's a positive sign for Indus Tower. Volumes coming back, momentum coming back into the stock price, holding on to the previous resistance point, and that is acting as a support for 200-day moving average for Indus Tower. I think all of that is attractive. That 167 odd mark could be kept as a stop loss or a support for this stock at current levels, and I would probably expect that in this phase of the rally, the stock may not just break past about 187 mark, but probably try and scale past about the 200 psychological levels as well.
Right, okay, that's the take coming in on some of those telecom players. Today, of course, IndusInd Bank, Maruti, SBI are the ones which have led the charge. That's not quite the case with the IT names, or for that matter, pharmaceuticals. So DRL, Wipro, Cipla, they're the ones which have which have been languishing in trade. There's, of course, HDFC Bank, Titan, ITC, ICICI Bank, and they have been large laggards in trade. The Adani names, though, Adani Enterprises, Adani Ports, and I think they started off the day in the positive, and from there they've seen a cool off. Kunal, you had a call on Adani Ports earlier today, right?
Yes, I still maintain that stock. So even though it's down 0.5% or so, the price action on the FNO is very, very attractive. The stock is still holding on to the premium in the October futures. I think 836, 837 is where the October futures is for Adani Ports, and I think looks attractive because the stock is holding on to that price level of 35 approximately, as well as yesterday or day before support that was around 820 odd mark.
Okay, point taken. Shibani, there's been a lot of action of late in the primary market, right? Slew of IPOs happening. Even if you look at the stake sales in terms of QIP as well as OFS, that's also ramping up. A lot of private equity exits as well. How are you reading it? Is it the case that the promoters are looking at exit and making that quick buck, or do you think that there is enough demand and that's why they are taking these calls?
So I think the way I would look at it is when markets are buoyant, many companies which would possibly want to raise capital come to the markets and make use of the buoyancy in the market. So that could be one of the reasons. What we've also seen is that in many cases, certain private equity firms which would have been invested in some of these companies over a period of time come to the market looking for an exit. So that could be the other reason. So typically, when markets are fairly buoyant, you see pickup in activity as far as primary markets are concerned. So for us as well, when we evaluate various IPOs as well as any of the primary market deals and issuances that are there, so couple of things that we continue to watch out for. For us, understanding the business of the company in terms of its market leadership or the ability to scale business becomes extremely important. We are continuously focused in terms of balance sheet and cash flows as well as quality of management. And then, of course, overlay all of that into in terms of the valuations at which the IPO is coming through. So it's very important to look at each IPO on its own merit and then take a view on the IPO space. But as I said that, whenever markets are buoyant, you see significant amount of flows and liquidity. It is not natural, and it is something that has happened in the past as well, where a number of companies, either for their own expansion purposes or for raising capital, or even some exits with some of the private equity investors who have been there for a long term, seems to happen. And that's what's happening at this point in time in our markets.
Okay, that's the take coming in on all the IPO flurry that one has been seeing. Just looking at what else has been holding out in the market and what's not. Berger Paints, of course, there's a bonus issue, which is why you're seeing this elevated move on the stock price. PSBs, the smaller ones, are looking quite okay. There's REC, Granules. They are the ones which are actually holding out in trade. Just want to bring out a set of other movers as well. There's Idea, like Anisha flagged off. There's PFC. RBL Bank is not doing all that bad at all. And then, of course, there are names like an MCX, L&T Housing Finance, Bandhan Bank, which are also holding out quite okay. There's Petronet LNG, Sun TV, LIC Housing, Apollo Hospitals, or Apollo Tyres, actually, I stand corrected, along with Balkrishna Industries, if I just want to extend that list. Shilpa, tactically, would you want to steer clear of sectors or companies which have high crude raw material exposure?
Yeah, on this junction, I would say yes, since it is looking little indecisive, and the counters are also having no clarity on the trend. So I would definitely recommend staying away from their growth scripts. Apart from that, we have many other opportunities in the market where you can venture now and stay put and enjoy the gains. Every day we get ample of number of opportunities. Like now, if we talk about, we see granules is up around 4.5% right now. But if you see, granules is also holding very well, and it is and it is actually breaking out of the consolidation zones of 338 now. A past move above 338, we will see a massive short covering rally from here towards 400. Today also we see very high OI build up there. So I believe Granules is one stock one can focus right now, and a good targets towards 380 to 400 is on cards.
Shibani, my question is to you now on, and just flagging it off from some of the tire names which are actually holding out well in trade today. Tactically, does one stay away given that, crude also has seen quite a bit of escalation in prices from sectors which have crude as a large component of the raw material cost?
So specifically, if you're asking me on tires, you are right that there would be some impact on margins because of the RM inflation that you are now starting to see. But also remember that on the growth side, a lot of the growth seems to be coming back, especially in terms of replacement demand, which we have seen either in the CV space and to some extent now in the passenger vehicle space as well. So from a tires segment, while we will keep a close eye in terms of what's happening on the crude as well as on the raw material inflation and its impact on margins, it will also in this context be important to see how competition is on in terms of pricing. Therefore, if companies are able to pass on some of the impact on pricing, margins will still stay intact. But on the growth front, in terms of replacement growth, some of that replacement growth seems to be coming back. So overall, if you look at the auto anch pack, not just tires, one is that we've started seeing demand stability coming back and coming through, replacement demand also coming through. and therefore in pockets of the auto ang space, we have been fairly positive. Of course, we'll keep a close eye in terms of how the RM inflation or the raw material inflation pans out over a period of time. Now, where crude is concerned, it is possible that crude does stay elevated for some time, given that a lot of the rise that you've seen in terms of oil prices is led on by supply constraints and the supply side dynamics taking over. Demand continues to remain fairly muted. So across the world and including China, demand is fairly muted, and therefore it is possible that while crude stays elevated, it may not breach or may not significantly go up over the $100 mark and stay there for a long period of time. But of course, the supply demand dynamics is something that we will have to watch out for.
That's the take coming in as far as crude and its dependents are concerned. But Hudco is one stock which is doing quite well for itself. 19% gain coming in there. Century Textiles has perked up in the last few minutes. What's your call, Kunal? Would you look at buying either these names or just stay away and not understanding the move as to what's happening there?
Yeah, it's difficult to comprehend this kind of a breakout move, but the charts for Hudco specifically, it's not a one-off move that in the last half an hour, last 1 hour, that there's been a good spike in volumes and the prices have moved up higher. It's been a calibrated buying throughout the day. I think right from the start when the stock opened at 72, 73 odd mark. From there on, it's been a consistent buying for the stock price, which means that this could be a trend breakout stock for the stock, and I believe breakout move for the stock, and I believe that this could actually result into a follow through up move. So what could only happen is that if the markets get into a further correction mode, you might see the breakouts getting a bit stalled, but then such kind of moves which come back on extremely strong volumes, they do see a follow through. If not in the next couple of days, largely over the next couple of weeks, I think these stocks should see a follow through up move.
Okay, a couple of other newsmakers. Zentek just bagged an order, so that stock understandably so is higher by around 5-6% the last time I checked. You also have Ratnamani Metals. They also had a positive news flow today. Having said that, Macrotech Developers is seeing a bit of a slide, and ditto could be said for a couple of other cement names. Nuvoco Vistas is down in the trading session, and some other names are also in the red right now. But time to get some BTST trades from our chartists. Wondering whether it's going to be BTST or STBT, Kunal?
I'll go with two buy calls. So the first one is a buy on MCX. The stock apparently has been holding up pretty well at the 1770-80 mark. I think even yesterday the stock managed to outperform. It's forming a bullish flag pattern on the daily chart. So would suggest a buy. 1860 as a target, stop us at 1720. And granules is the stock which we discussed in the morning as a chartbuster idea. Looks very attractive at current levels. The stock has confirmed a breakout even on an intraday basis about the 335 mark. So would suggest a buy. 355 as a target, stop us at 323.
Right. Shilpa, any BTST or STBT ideas from you?
I have two BTSTs as well. One would be on Oberoi Realty. It might look like a contra call right now since it is down by 1% now. But I believe this 1100, it has a very strong support base. So with the stop loss just below 1100, one should look for targets of 1170 from here. The other one would be a buy in Hero Motorcorp. I believe Hero is holding on very well here. So with a stop loss of probably 2980 from here, one should look for targets of 3080 to 3100.
Right. Okay, Shilpa, we'll let you go on that note. Shibani, you too. Thanks as always for taking the time and joining in.